Very good morning to all our viewers. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. So do get ready for that. But having a look at the market, Cheryl, global jitters spilled over clearly on the D Street, but Nifty is trying to hold on the ground after that gap down start, trying to recover a bit indeed.
Yes, absolutely. Very good morning to you, Shrishti. No doubt that if you look at the market breadth, it is tilted towards the favors of the decliners. Markets are trying to see a tad bit of recovery, 0.5% uptick coming in for Nifty from the day's lowest point. It is, however, trading just a tad bit above the 17,400 mark as we speak. Talking about Nifty Bank, that is underperforming the benchmark indices, 1.7% downtick coming in for the Nifty Bank. Remember, the financials across the globe were hammered out of shape, and we are seeing some trickle-down effect on Indian financials as well. Talking about the list of gainers, we only have a handful of gainers in today's trading session, with Tata Motors being the top gainer. We will talk more on that in a while from now. You have Britannia and Divi's Laboratories, that are the other ones that are holding on to mild gains as we speak. But on the losing side, you have Adani Enterprises, that's the top Nifty loser, but you have to mark the recovery that Adani Enterprises has registered from the day's lowest point, approximately 6% uptick from the day's low coming in for Adani Enterprises. Apollo Hospitals is the other counter that is declining in trade, 2.5% downtick. HDFC Bank, we have the big exclusive with HDFC Bank that you will see on the channel through the course of the day. Nevertheless, that particular counter is down about 2.2%. HDFC also is down about 2% as we speak. So yes, the market breadth for now is in the favor of the decliners. Talking about the sectoral indices, the only one that's barely holding onto the positive territory is FMCG index. That's the one that is actually trading flat with a positive bias. Apart from that, rest all the sectoral indices down in trade, with the PSU Bank index declining as much as 2%. But yes, we did mention about Tata Motors being the top gainer on the Nifty today. And also, why is Tata Motors in focus? Because you have Tata Tech that is going public. But what can be the possible reasons for this particular counter to go public? Remember that this will be the first Tata group of company to go public in approximately 18 years or so. So let's get Nikunj Dalmia, who's the editor of ET Now and ET Now Swadesh, on his take on what he makes of this big IPO from the Tata basket.
Why are they taking this company public? You could ask yourself this question. Do they really need the capital? I think they're taking Tata Tech public because it's a subsidiary of Tata Motors. So the proceeds they move into Tata Motors balance sheet. This is in line with the program what Chandra had shared, that we want to make Tata Motors net debt free.
But then
by
that's
2025.
just an accounting entry then.
No, Aisha, the money comes into the balance sheet.
Yeah.
So what happens is that when the money comes into the balance sheet, the debt reduces. That's one. Second, this is a technology company. Can Tata's, and the minute you come into the public domain, you will get noticed. And a Tata Group company which has
will
an
never
embedded,
go unnoticed, yeah.
it'll get noticed with an embedded play on technology and design. Could this be the next Tata Elxsi for the Tata Group in making? That is something which minority shareholders would look at. Second, because this is a subsidiary of Tata Motors, eventually if the price of Tata Technologies in 2 years or 3 years goes higher, then the sum of part for Tata Motors in a sense changes completely. That's my sense. But from a market standpoint, I don't think this will have impact on the stock per se today, because markets knew this was coming. So the stock had already reacted to Tata Motors, this news, I think, when their intention was made clear. We looked at the sum of part numbers also. The maximum upside which was there was about 3 to 4%. That I think is getting fairly captured now. But this could be a promising IPO and a stock to watch whenever it goes public, considering that at Tata's, it is technology. So more than Tata Motors, I think on a standalone basis, this could be an exciting IPO.
Okay, so that was the editor's take on the upcoming Tata Tech IPO. Well, let's move on to the show. And viewers, today it's Friday, and today it's a Learning Friday for you, as Kunal Bothra is joining us live today for Buy Now, Sell Now Pathshala. So over to you, Kunal. What's the interesting topic that you've got for our viewers today?
Thank you so much, Shrishti, for that. Good morning to you as well as to Cheryl. Now, today's topic is a bit of an offbeat topic, so we're not discussing any indicators or chart study or price patterns, but it's got to do with the trend on the index, which I think matters quite a lot given the kind of market scenarios we've been facing over the last 3-4 months as well as over the last couple of days. So the major observations which I wanted to point out from the Nifty trend perspective was a major falling following trend line. So over the last 2 or 3 months, the markets have been going into a downward trend. So this is the major important resistance line. So as you can see that this was the high the markets had made in the month of start of December around this 18,888 mark. And this is the second zone of resistance where we managed to come back towards this trend line. And both of these are exactly parallel lines. So you can see that the markets have been flowing into this downward trend. Now, the two important patterns over here for a short term as well as for a medium term trader is to watch out for zones of supports and demand. So this forms the major zone of support. As you can see that this was the zone where the markets had hit just around that budget low, around the 17,300, 350 mark. We managed to bounce off quite well. We came back towards that 18,000 mark, corrected back again, and we entered the zone back again around the 17,300 zone just about 1 or 2 weeks back. And today back again, we are almost at the 17,300 mark. So this is a very strong support zone for the index. If there is any major reversal for the index, then this support has to be broken down, which means the markets have to confirm a break below 17,250 mark. On the upside, this is the first zone of resistance, which is 17,800 mark, as well as the second important zone of resistance. So as you can see, that 3 times that the Nifty tried to scale past this level, but it was met with a falling resistance over here. So net, the trend for the index is still into a downward trend. We are tapping into the third time the strong important support zone of 17,200. If we break below this level, I believe a very sharp correction could come by. But if we manage to hold on to the 17,200 mark, then we could probably get into a bounce process and maybe come back towards 17,800 on the Nifty.
All right, thank you so much for that, Kunal, for exactly explaining to us where the Nifty range lies currently, because a lot of our viewers were pretty concerned with the way how the markets were moving, Shrishti. So 17,200 is definitely an important support level for the Nifty. If it has to break above that, we could see it go up to 17,800 at least. But for now, we slip in. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. You can connect to us live. We are live on YouTube, Facebook, as well as on Twitter. Or you can also write to us on the WhatsApp number that's flashing on the top of your screen. Do remember to mention your name, also the stock name that you're looking to invest in. If you've already invested, mention the buy price as well as the quantity and the time horizon that you're looking to hold account of. That will help our experts help you better. And talking about experts, today we have Kunal Bothra as well as Avinash Gorakhshekar joining us on the show. A very good morning to you, Kunal, as well as Avinash. Thank you so much for joining us on Buy Now, Sell Now. Avinash, let me come first to you before we kickstart with the queries. Let's talk about the markets. No doubt today the markets are actually falling on back of what's happened globally. But in such a scenario, what should retail investors do to make sure that they protect their wealth?
Yeah, good morning, Cheryl. My sense is, Cheryl, these kind of global events are now something which most retail investors have got to get used to. This is a normal occupational hazard in the markets. But I think the clear focus of retail investors should be to have a more disciplined approach to investments. Please remember that only in these panic times you get quality businesses at good prices. So I think one has to look at good quality, well-managed companies, very strong balance sheet companies in these kind of troubled times, and actually do a kind of SIP for a longer period of time. I'm not surprised that once the market digests this news, every day in the market is a new day, and I think the market bounces back with renewed vigor and enthusiasm. So I think keep the focus long term and always try to remember pick up quality stocks when the going is bad. That actually will generate a very good alpha if the investor has a horizon of at least 3 to 5 years.
Okay, so that's the advice coming in for all our retail investors. But let's move on and kickstart taking all your stock-related queries onto the show. And the first question that I have is coming from Bharadwaj. Kunal, let me take it up from you. He's holding 130 shares of Indus Tower at an average price of 210. He wants to know, can he add at the current market price? Though he's a long-term investor. So what's your view?
Well, I've never fancied the charts for Indus Tower. I think surprisingly the last 2 years, 3 years, and even prior to that, the stock has been showing bearish trends for itself. There have been periodic rallies for the stock price, but then it's not been any meaningful change of trend for Indus Tower. So I'm not sure the rationale for the viewer holding on to the stock. My advice, if you're asking me, that I would suggest an exit on any kind of a meaningful rally, and as closer the stock gets to your cost price, I think it's a good zone where you should look to book out and shift to some other credible name.
All right, this one is coming from Swayam and he wants a view on Kalpataru Power. Avinash, he's holding about 320 shares at a price of around 485 rupees per share. His view is for the short to medium term. In case for medium term, what should he do with Kalpataru Power?
No, I think Cheryl, we can continue to hold on. See, Kalpataru Power is a very large player in the power, transmission space. It's got a very large EPC order book, and I think recently the company has got significantly large orders which are expected to be executed over the next say 12 to 18 months. So I think if the investor has a medium-term horizon, at least minimum 12 to 15 months, I think he should hold on. This is a quality play, and I think with the interest in the power generation sector, even power transmission companies like Kalpataru should do well. So continue to hold on. I think probably you'll have to wait for the next 12 to 15 months to get a decent risk reward.
Okay, Kunal, once again coming to you. The question is from Ravi from Vijayawada. Just now we discussed about the probable trend for Nifty going ahead. He's still looking to buy put options for Nifty index and he wants suggestion which option to buy and the price. What's your view?
See, ideally you should wait out for a confirmation. So, what happens is when we get very, very close towards a major support and the support which we've tested 3 times, but surprisingly we've not managed to break, that support level. It is always prudent to wait out for that confirmation. So my sense is that 17,200 and below is where you should look to initiate a put on the index or a bearish call on the index. So you can look out for 17,100 or maybe 17,000 as a round strike where you can look to buy puts if you are looking at slight out of the money. Else, I think buying at the money, which would be at 17,200 put, would be a better option. But as I said, that you should ideally initiate only on a confirmation that the index has confirmed a breakdown, which should be at 17,200 and below.
Okay, let me just skip the queue and then take this next one to you because this is based on Nifty as well. Kunal, now you have Ayush who's writing to us. You did speak about the support levels for the Nifty right now, 17,200. You did mention it's a crucial support level for the Nifty. But what he's asking is, can we expect Nifty to go down right up till 16,000 levels in the next few months?
See, it's very difficult to categorize that, till what extent the markets would rally because markets are, always a factor of what happens, globally as well as domestically. And we know that, there are a lot of things which are happening across the globe and which could probably shape up, over the next couple of months. But you have to take it step by step. Initially, if this breakdown happens below the 17,200 mark, we could expect 16,750 to 800, which means another 400 to 500 points on the downside as the first initial target. And then probably we can scale it down lower, assuming if the chart patterns look a bit more bearish from there on.
Okay, so from Nifty bouncing back to stocks, and Avinash, the next question is from Guru, and he wants to know is CESE Limited is a good company to buy, and can he buy this counter at the current market price?
Yeah, I think clearly for long-term horizon, Shrishti, the company definitely looks interesting. I think there's a lot of interest in power generation, and I think my sense is that over the next say couple of years, if the investor has a kind of time frame where he wants to build a portfolio, he could definitely look at buying the stock on every decline. We believe that earnings trajectory over the next couple of years should be pretty solid. So to that extent, I think he can definitely nimble at the current price, but keep a time frame of at least 18 to 24 months.
All right, the next one that I have is coming in from Dhananjay Kunal. Technically, he needs support levels to accumulate stocks like Reliance Industries as well as Polyplex. In fact, Polyplex, I have had a lot of viewers actually talk about this particular counter. A lot of interest creeping in this one also. How are the charts looking for this one? Do you think that it merits such an increased participation in this counter?
Not really, frankly. If you ask me, the volumes are abysmally low into stocks like Polyplex. The trends have been very, very negative for the stock price. It's just that over the last 1 month, the stock has not made a major low or rather protected its previous low, which I think was around the 1300 mark for Polyplex. So that could just be the only reasons why the stock may be getting some bit of more limelight. But then I think other than that, there is no reasons why you should be having too much of weightage on a stock like Polyplex. Coming to Reliance Industries, it's at a very, very crucial juncture on charts. 20 to 50 was the level from where the stock bounced off in the month of February. So, and the bounce was almost 200 to 50 points for Reliance Industries from those levels. And now we are just about coming very close towards retesting that 20 to 50 mark. So, as a support, again, as I said for Nifty, same would be the case with Reliance. If the stock breaks below the 20 to 50 mark, that could signal a start of a downward trend for the stock price. Till then, we can expect the stock to consolidate.
Okay, Kunal, once again coming to you. Arvind Reddy is looking for a short-term target on NBCC. He's holding 50 shares at a price of 34 rupees 20 paise. The stock has seen good rally recently. Your view?
So ideally, it's a good time where you should look to pair out some gains or book out some profits over here for NBCC. Now the chart patterns are looking quite okay, but it's just that when you see a high beta stock getting into a very strong rally in a market scenario which is getting a bit more wobbly, it's always better that you try and book out profits, or at least try and trail your stop losses to a level where you are comfortable that you would probably at least end up getting 5-6% plus into this kind of a zone. So I think it's better that you book out profits over here. If not, trail your stop losses to today's low, which is around the 37 mark on NBCC.
All right, this one's coming from Dheeraj. Dheeraj wants to know whether he can invest in IRFC at the current market price. And the fact that he's asking he can invest, I would like to think that it is for the longer time frame. Then Avinash, do you think IRFC stands out where if you want to play the railways as a theme?
I think, Cheryl, if the investor has at least 2 years in mind, he can definitely look at investing in IRFC because, see, basically for IRFC, Indian Railways is the only customer, and almost 40% of the railway capex is funded by them. Most importantly, IRFC is more of a dividend play rather than a growth play because the dividend yield is much better than a normal fixed deposit. So I think investors who want to play safe and want to get steady returns, say over the next 18 to 24 months, could definitely look at accumulating at the current level.
Okay.
Oh,
You
sorry,
want to
no.
continue, Cheryl? Okay, moving on to the next one. Sudha is a long-term investor. Avinash, she's holding some of the rail stocks and some small finance bank totaling 4 stocks, but currently at a loss of 15 to 20%. That's the question from Sudha. But Sudha, I need to share your stock names as well. So let me move on to the next one. Gautam Kunal is asking. Is this the right time to enter into BSC Limited? Your views?
Well, I think I've been advocating that it makes a lot of sense to buy stocks like CAMS, CDSL. They have shown a lot more better confirmation as compared to BSC of a near-term bottom formation. So if you're asking me, then I would probably suggest an alternative. In case if you're looking to buy BSC, then you can start nibbling at current levels. If the stock holds on to the previous support, I think 425 or 427 was the previous low for BSC. The stock had hit 1 or 2 weeks back. If that low is not broken down, then there could be a chance that the stock may get into recovery. But as I said, that at an immediate stage, you can look at maybe CAMS or CDSL as a better bet. And then if BSC holds on to this 425 odd mark, then you can look to buy the stock.
Okay, this one is coming in from Raj, and he is writing to us from Surat. He wants to know the entry level for Bajaj Finance at current market price, Kunal.
So if you're looking to buy, then I would suggest to wait out for a confirmation back again for Bajaj Finance. Today, for example, the stock is forming a bullish hammer pattern, but then we've not even completed half trading session for today. So I'll probably wait out for end of the day. In case if the stock holds on to this bullish hammer pattern, then today's low could be kept as a stop loss and you may look to buy.
Okay, Avinash Krishnan is holding 250 shares of Biocon Limited at a price of 180 rupees. He wants to know, should he hold or sell this particular counter and rather switch to Glenmark Pharma? He can still wait for one more year. Your view?
I think my sense is, Biocon has disappointed investors. In the last quarter, there was a exceptional loss by which, the company incurred net loss on the bottom line. My sense is, if the investor doesn't have a long-term view, then I think he should definitely exit. But a better option could be Sun Pharma. I believe that Sun Pharma is far more better positioned compared to Glenmark. And that is because, their specialty product portfolio is now doing pretty well. And even from these levels, one could expect a decent 15 to 18% upside here. So I think if at all he wants to switch, Sun Pharma could be a better bet at the current levels.
Okay, this one is coming in from Tarun, and he wants a technical view on NRB bearings, Kunal.
So NRB bearings is not a great chart. I think trading at 134.35, corrected from 180 in the last 4 months from November highs for NRB bearings. The major support for the stock is still at 105 levels. So in that regards, there could probably be a phase where the stock may come closer to this 105, 110 mark. So I think if you're asking for a better buy zone or an entry zone, then I would suggest wait out for a correction of at least 10%. Let the stock come back towards 120 approximately. That could probably initiate a better risk reward for NRB bearings.
Okay, so that's the view on NRB. Welcome back to Buy Now Sell Now, and let's keep it going with your stock related queries. And the next question that I have, Avinash, is coming from Chetan Shah. He is already holding 11,400 shares of IDFC First Bank from an average price of 48 rupees. He wants to know, is this a good stock to add more in his portfolio? And if yes, then at what price he should enter for more quantity? What's your advice?
Clearly, Shrishti, from a long-term point of view, at least the next 2 to 3 years, IDFC First Bank has managed to generate a very strong CASA deposit of almost 50% plus ever since it got converted into a proper full-fledged bank. Most importantly, it focuses on the SME and the MSME sector, where the management commentary post the Q3 numbers have been extremely positive. My sense is, if the investor has at least 2 years plus kind of horizon, he can even accumulate at the current level. And one interesting development which has happened is IDFC, their parent, has actually invested about 2,000 crores plus currently to maintain their stake in the bank. So which clearly shows, that the promoter itself has got a lot of, positivity and confidence in the bank. So I think keep a time horizon of at least 2 years plus, and I think one can even nimble at the current level.
Okay, this next one is coming from Sagar and Kunal. This one is for you. I will read the query as is written by him. He wants a technical view on Tech Mahindra because he's noted the fact that 3 weeks ago in your BNSN Pathshala, where we spoke about price volume breakout and you gave an example of Tech Mahindra's chart, he's saying that the chart indicated it was a bull trap and he had shorted it at the same level where you gave a buy call. He wants now to know, has your view changed on Tech Mahindra, or is this still the same as before? Because he believes that the breakout has failed, the stock is back into consolidation zone, or are you witnessing some sort of a bounce back on Tech Mahindra? The levels that he's talking about is, I think, around 130 to 135, if I'm not mistaken.
Well, first of all, the example was more to give on the concept side for how price volume breakouts happen. Now, price volume breakouts, they tend to perform very well in a rising market, but when the market itself are a bit more wobbly as well as volatile, that's the time when price volume breakouts, they generally take a bit of a back seat. Now, coming to the point of Tech Mahindra, in the 3 days when the stock had recovered from 1,000 to 1150, it was almost a 15% recovery. Right now, what you're seeing from 1150, the stock has come back towards 1,050, 55 levels, which means it's completed a retracement, a 50% retracement. A break of a trend would happen once it breaks or retraces the starting point of the price volume breakout, and not just a mild correction of 5-10% odd, which comes in between into the stock price. So the view still holds on for Tech Mahindra, and till the time the stock doesn't break below the starting point of 1,008, 1,010, the view would remain bullish.
Okay, Avinash, the next question is on a counter. We don't discuss that often. Manish is holding 100 shares of Vaishali Pharma at a price of 180 rupees. That's a small cap pharma company. Do you track this one, and would you be able to advise him?
Sorry, Shrishti, at this.
Okay. So let me move on to the next one, and the next question that I have, Kunal, is coming from Akhil. He's from Delhi and he wants to know, is this a right time to enter into Adani Ports and Ambuja for a minimum of 1 year, and that can also go up to 2 to 3 years of investment horizon? I know this is tough, but what's your view?
It's very tough because Srishti, there are a lot of things which are happening for the Adani group of stocks. It's very, very difficult to categorize that whether the stability would happen immediately. Yes, Adani Ports and Ambuja Cements have been a bit more resilient, I would say, with respect to the fall the stocks had seen in the end of January. But then, that doesn't take away the fact that the entire group is into a bit of a volatile phase. So I would stay away from recommending into this pack as of now.
Okay, this one is from Manish Raju. He's holding 100 shares of Pathshala Foods at the price of around 1,182 rupees per share. This one is for you, Kunal. He wants your view on the short to medium term. Is it hold, exit, or average at current market price?
I think it's a hold as well as possibly even an accumulate at current levels. Today, even though when the stock is down 1.5%, the indicators are coming back into the positive territory for Pathshala Foods. So I think it's a good opportunity where you should look to buy or accumulate further.
Okay, Kunal, once again, I have to come to you. Deepak specifically wants to know your view on BEL. He's holding 3,000 shares at a price of 101. Wants to know the short-term target and a level that where he can exit this counter.
So would maintain the broad bullish stance for BEL. So BEL, HAL have been the two stocks which we've been recommending from the defense pack as such. HAL has done exceptionally well. It's come back towards the previous 52-week highs, and crossed beyond that. BEL is somewhere lagging behind, but I believe possibly in the next 1 or 2 months the stock could also play a catch up, provided the entire sector does pretty okay from here on. So I think I would suggest a hold on BEL, and from a near term play, if possible, you can look to even average the stock at 92 levels for a target which could be around 104 to 105.
Okay, let me give Kunal a breather because I have a lot of short-term queries, and let me take this one to you, Avinash. This one is coming in from Abhishek, and he wants to know whether he should remain invested in RVNL for the long term. And his long term, he's pretty sure of it. It is minimum 2 years and maximum is 10 years. So he wants to know whether he should stay put with this one for the longer term, or should he look to book profits, which is around 98% of the invested capital at present. What should be his strategy?
No, I think Shamil, since he's up by almost 98% on his investment, my suggestion is that you should always follow a margin of safety strategy. He should obviously book out some quantity, recover his capital, and hold the rest quantity for the next 2 years. See, the railway infra space is a very large opportunity. In the current budget, the investment in railways, which was announced, was about 2,40,000 crores, and RVNL is already sitting on an order book of almost 4,000 crores plus. So order book is going to give them strong revenue visibility. So I think hold on to the rest quantity, and at least 20 to 25% of his holding, if he can book out, he could obviously make all his shares completely free of cost. So that takes out the volatility in his investment, and at the same time he enjoys his capital has already been recovered. So I think partly one can book out and partly one can hold for the next 2 years.
Okay, Kunal, coming to you for next one. Shashank wants to know, is this right that we are seeing an inverse head and shoulder on the monthly time frame on Tata Motors, one of the top nifty gainers today? What's your view on this?
I mean, that's a huge inverted head and shoulder if you're talking about, which I think started off from 2016-17. Head and shoulders on, should always be looked out for as a pattern which is formed on a short-term time scale, because these long-term charts, goes through a lot of change of sentiment. And head and shoulders, whether it's bullish or bearish, head and shoulders, they happen with a change of sentiment or a sudden change of sentiment for stock prices. That is why we call them as strong reversal patterns. But if the reversal takes out 5-7 years, then the intensity of that pattern subsides significantly. So I would not call it as an inverted head and shoulder, even though academically the stock may be forming one such pattern on the monthly charts.
Okay, this one is coming in from Mr. Chedela Kunal. Privi Specialty Chemicals, current market price is around 1100 rupees per share. He's holding a quantity of around 937. He is asking, the stock has been seeing a good up move over the last few trading sessions. Wants to know that is this up move should be viewed as a short covering or a comeback for the specialty business?
No, I think it could be it could turn out to be a good move for previous specialty chemicals. But again, I think it's a stock which I frankly don't track very regularly. But just looking at the last 3 days of charts, it's a classical price volume breakout for previous specialty chemicals. From 900, the stock has moved very quickly towards 1200 mark. So ideally, wait out for a minor retracement. If the stock retraces back again, say another 30, 40 points, 50 points from current levels, that's a good zone where you may look to average or buy further.
Okay, that's the view coming in from Kunal. But with this, viewers, it's once again time to
Group Micro Term Assurance Plan. Keep your family secure.
Welcome back to Buy Now Sell Now on ET Now, and let's keep going with your stock related queries. And Avinash, coming to you for the next one. The question is from Rohit, and he's holding 100 shares of HDFC Life at a price of 671 rupees. He's looking to add more at the current levels. What's your advice on this? He's a long-term investor.
Shrishti, I think he can definitely add more at the current level. Considering the HDFC Bank and HDFC merger, I think the key reason for this stock to underperform is basically because until the merger doesn't go through, there's a lot of uncertainty on the combined entity. Most importantly, in the budget, there was an increase in the tax dues for premiums paid over 5 lakh rupees. So I think that also has contributed to some underperformance in most of the insurance companies, including HDFC Life. So I think keeping a 2-year view, I think one can definitely expect some decent outperformance here. The company is a market leader in the insurance space. And my sense is that, you need to have a little more patience in this stock. It has underperformed. So I think keep a time frame of 2 years plus and, stay invested here.
Okay, this one is coming in on Sequence Scientific. We have two viewers who've asked a question, Kunal. One is coming in from Indu Sharma, who's asking about Sequence Scientific, has about 600 shares at 105 rupees per share. She wants to know why is the stock seeing an up move. It's key to note the fact that there was a news development that led to the sharp rally in the counter. On the other side, you have Saumitra also, who wants a view on Sequent, because given the fact that the stock has seen a huge rally over the last of almost 30% post backing off from unfavorable acquisition, he wants to know whether he should still hold on to Sequent Scientific, hoping that it will see a huge rally.
So the last 2 days, of course, we've seen very strong price volume move for Sequence Scientific. This has resulted into the stock showing the weekly and the monthly charts into a bullish engulfing. Now that's a very good prospect for the stock, that maybe it's established or formed a major bottom at the 62-63 mark from where it bounced off. But then ideally, when the news and the momentum fizzles out, is where you start buying the stock, and that could probably happen once maybe over the next one or 2 weeks the stock settles into a trading range and retraces from these levels of 83, 84 where it's currently trading right now. So yes, it's emerging to be a very good chart, probably a very good risk reward buy from the lows the stock had it at the levels of 62 mark, but maybe not the right price to buy or start entering. I would suggest a wait out for at least a dip of below 80 levels for Sequence Scientific. That could be a zone where you may look to start buying on dips.
Okay, moving on to the next one, and Avinash, coming to you, Dr. Bhatt is holding over 1100 shares of TV18 from an average price of 43 rupees. What to do now? He's sitting at a loss.
I think this stock underperformed significantly in the last, say, 2 to 3 quarters. So my sense is, the entire media space history has underperformed. If you look at performances of the other leading players, my sense is that, looking at the kind of cutback in budgets by the FMCG kind of segment, most media companies have underperformed. TV18, my sense is, unless the investor has a long-term view, at least 2 to 3 years, I would not be surprised that in the short term there could be very few triggers for this stock to get re-rated. So in the near term, if the investor is not interested to hold for the next 2 to 3 years, he could look at other promising sectors like capital goods, auto components, where the risk reward and the earnings visibility of these companies, within these sectors is much better. So I think a switch may sound better. TV18 is unlikely to move up in the near term.
All right, with that, let's kickstart with the rapid fire then. And this one is coming in from Mahindra Patnaik. He's saying that he's bullish on banks and 16% of his portfolio is in a banking sector, and he has SBI, ICICI and a lot of them. Kunal, do you think now is the time to book profits out of some of these names, because he's making profits in a lot of them?
Yeah, you can book out 50% profits, but then hold on to the quality names which you already have.
Okay, Avinash, D. Mazumdar is holding 1,000 shares of NFL from an average price of 66. Currently at a profit. He wants to know, is it a good time to book profits in this counter?
Yeah, you could book partly and hold on the rest. But definitely long-term prospects are good.
Okay, Tripta wants to invest in one defense counter. Does Paras Defense stand out amongst all of them, Kunal?
I think HAL or BL are much better bets.
Okay, Kunal, Sunil G is looking for a technical check on GSFC. Is looking to invest in this counter for the next 2 years.
Very interesting chart. Stock has been holding on to the support of 120. Keeping that as a stop loss broadly, you can look to buy.
Okay, Sri Kutan has VIP at 720 rupees per share. Should he average at this level or look at another stock altogether, Avinash?
No, I think he can continue to hold on. I think continue to hold at least for the next 12 to 14 months.
Okay, Kunal, Mr. Singh from Pune is looking for a technical view on global health and a good time to enter this particular counter.
Well, not been tracking the charts, but I think at current levels, the stock seems to be coming back towards a major support, 500 levels approximately.
Kunal, Ankit Jain is holding Oil India, purchase at 255 rupees per share, hold or exit?
I think you should look to hold on and look at this as a more of a long-term time horizon.
Okay, Avinash, Bharat wants a fundamental view on Goldium International. Do you like this counter?
Yeah, I think short term, I think one can definitely hold on, but time frame of 3 months, because they are perfect at the US market.
Okay, this one is from Udaya. He's writing to us from Chennai. He wants to know about Wipro. Should he average right now? His average buy price has been 448 rupees per share.
I would suggest an avoid.
Okay, but with this, viewers, it's time, we are actually timed out in this session of Rapid Fire as well as onto the Buy Now Sell Now show. Thank you so much, Kunal and Avinash, for joining us today on ET Now and helping all our viewers with their stock related queries. But with this is a goodbye from me and Cheryl and the entire team who put this show together. Thank you so much for watching.